welcome to the Financing Freedom channel, and welcome to our first episode. We are going to dive in and analyze our trades for September of 2024. We're nearing the expiration of our option trades, which will come due on October 18th, or this Friday. It's the traditional expiration, which is the third Friday of every month. Obviously, there are other expiration days depending on what you're trading, but we try to target this one because it gives us the most bang for our buck. We get more option premium by targeting this date. And so, if at all possible, that's what we try to stick to. Now, for the month of September, we returned some pretty nice profits. For a almost $27,000 account, we returned $1,210.36, or 4.51% return on our capital investment here. Now, this isn't completely accurate. This is a conservative estimate because what I do at the end of every month is I take our return and I put it up against the value of the accounts. Now, that means that return is often included in that. And it also means that any sort of money I've invested into the account during the month is included in that. Now, why would we do this? Well, because if we do it the opposite way, it skews our results drastically, right? If we had a $27,000 account, but we actually only said that it was $23,000 and we put $2,000 into the account over the month and then made $1,200, it would drastically skew the return on investment higher, which really isn't great for transparency. Kind of boosts those funds and makes it look worse, or makes the account look better than it is, I guess, if you will, which really isn't an accurate depiction of our returns. I would rather them be more conservative and the account actually performing better than we're portraying. And then that just kind of gives me that confidence. Our goal here every month is roughly 3%. And historically, we've really done that very well. With that 3% return every month, we really do quite well annually. And, 30% returns on an account over the course of a year is quite nice. So let's dive into our Fidelity account. We do run two different accounts, Fidelity, Charles Schwab. The Schwab account's kind of cool for a little reason. I'll tell you why in a little bit. So Fidelity, our big trades for the month were an NVIDIA $114 put. We've returned 99% of the profit on that trade. We were paid $419.30 because we sold a $114 put. So they paid us our money up front. And to date, we've recouped $415 of that, locking in that profit. That really can't go against us unless, I guess, the market plummeted by the end of this week. Then I guess we could lose that, but it would be highly unlikely that would occur. So we've done quite well. At the time of that trade, NVIDIA was $116.26. This is the chart on that day we took the trade. We were at the middle of the Bollinger Band, and really we could go up or down, right? But we were above support, that middle line there on that Bollinger Band, and we had just recently tested a low at $100 roughly for NVIDIA. It bounced back up. And the only thing that was possible here, I use a different style of trading called ICT. Some of you may know about it and some of you may not. It's more for a live trading, or I guess active market open type trading, short-term trades generally, but it's pretty accurate and really gives you a good direction on where the price is going. I used to trade more aggressively, and then I'm just not a patient person and found that options locked me into a trade for roughly 30 days and that I traded much better out of that. And so that's how I became an options trader. So we analyzed this, could retrace to $112.48 because we'll commonly fill these fair value gaps or the price of this candle at the 50% zone, which is that 112.48. So selling a $114 put, if it retraced to 112, that's kind of an area of safety, but we would also expect kind of a bounce from that point. Could it go lower? Absolutely, but when you analyze this, really the zone that it would maybe go to is $87.74, and we bounced off of 100. So with the current market sentiment, I don't favor that occurring. Could it happen though? Of course, we have to take that into account every time we make a trade, right? What could the worst case scenario be? But for this trade, I felt pretty good about it. So we'll exit out and see where NVIDIA is today. you may already know, but we blew the top off of the Bollinger Band, $138.18, which is why we've done so well on this position. So good call, right? And analyzing the rest of our trades for September, we did receive a dividend from Ford. I do like Ford, hold 100 shares of it. Was assigned a few months ago and was not sad about that when Ford had a large sell-off. I do hold Pfizer. I've been holding them for quite a while, and my entry price is $27.78. So I received a $42 dividend for Pfizer this month. I also closed my $29 call for October and opened a November 15 $29 call for $99.32. So we made almost it was almost $100 there. So we made almost $30 roughly in profit from rolling that position for an extra month, and we got our dividend to boot. So $72 ish profit for the month from Pfizer. Pretty exciting. We really didn't do anything. I also rolled a Western Union call. So I don't see. Oh, it's up here. So Western Union, $70.06 is what we repurchased it for, and made $118 off of that. So I'm terrible at fast math, and so we made $48 rolling it just a few months into the future. So we went from September, October, November, so 2 months out, and we left it at that same $12 price range. And in doing so, what did this do? Well, Western Union was going to pay out their dividend the end of September, and it was over that $12 price range. Western Union's a pretty good dividend payer, roughly, I think, an 8% annual yield on that dividend based on the current price. And so with that, I didn't want to get assigned early and miss out on that dividend. So we rolled it. We made some profit from rolling the option and collected a sweet dividend premium at the end of the month. So definitely a win-win. Pretty excited about that as well. For the other part of September, we did receive a dividend on MPX. This is not my favorite stock. I kind of got into it early on when I was trying to trade options, but buying them cheaply. I like the stock. I like the company. I like where they're going, but they did have a sell-off since then. I'm just holding. I like this company. I don't know that I would necessarily buy it more though. But did make $14 on that dividend premium. And we can do a deeper dive one of these days on MPX and why I continue to hold it rather than just getting out of the position. I did add $2,364 to my account this month. There you'll see my NVIDIA put selling for $419.30. And then I also opened a call on my Ford position, making $27.32. Now, Ford is still under that $11 zone. There's about 4 days left, though, and we'll see if that gets assigned. Probably would roll it potentially if we get close to assignment. I like Ford. We're heading into the end of the year. They usually pay their extra dividends in December, or a special dividend in December. And so might try to acquire that. We'll see how the month goes. And then also $43.46 in just interest from having cash in this account. And that's kind of why I really like Fidelity, because they pay you a pretty decent amount of interest, near 5%, give or take. It's all based on the bond market. Right now, I think it's like 4.7% interest. And so I made $43.46 on the cash that's sitting in my account that I'm also using to leverage selling these puts. So kind of get to double dip. And I really like that about Fidelity. They make it super easy to do. I have different loves and hates with Fidelity and Charles Schwab, but this is a big money amplification benefit, I guess, for Fidelity, because I got paid $43 on my almost $12,000 balance, and I didn't do anything for it. I just traded everything like I wanted to anyways. Portfolio performance, Fidelity, this is one of the downfalls that I just don't love about Fidelity. This isn't the most accurate. So for September, almost a 3% return there, $558. But this doesn't take into effect everything for the account, because say we jump over here, for September, we made $687.30. And if you come back, it does not show that, right? 558. The difference being, and I'm not exactly sure, but I know they don't include the interest in this. And I'm not exactly sure what else is not quite the same in that, but there's, we're close. So, but based on Fidelity, almost 3% return just on the cash in this account. So let's dive into Charles Schwab. Charles Schwab is kind of fun. I really enjoy their trading platform. What I don't like is they're not like Fidelity, where it's as easy to get that interest on cash just sitting into the account. However, what got me started in Charles Schwab is I have a bunch, or had a bunch, of American Express points, and their American Express Platinum card allows you to invest your points into Charles Schwab. And this account is almost fully funded on American Express points. I believe I put $500 into open and start the account. The rest of the money in this account is either profits or membership points that were converted. So pretty exciting stuff there. These are my positions. American Airlines, I really like trading options on this company. They're just very flat and consistent. Really is nice when you're selling options. So sold one $11 call. Essentially my entry price to this was like $10 and some cents. Maybe 60 or 80 cents. So this was just to make some profit off some previous call or put options that I had that gotten assigned. And so I did an $11 call as well as an $11.50 call. I expected American Airlines to kind of push up towards that $12 zone. So wanted to make some money on it in that price movement upwards. I didn't want to cap myself, but I also wanted to return some option premium. And so that's why we split it at an $11 and $11.50 call. And it's nearing that $12 zone, kind of as I'd anticipated. And so, man, I wish I would went for the $11.50 call, but I might roll both of these positions. We'll see as the week gets closer to the end, and see if we can't lose that option premium, but we'll increase the overall profits on the position. So we'll see how that goes. Sold three $12 puts. Again, I kind of expected us to break $12, so I thought this would be a pretty good point to go for. And the $11 put, I sold those just because the cash, the way it sat in my account, a little bit more conservative, but also I could sell two of these and utilize all of the cash that was sitting in the account and get some return on that, because Schwab unfortunately doesn't pay as much interest when it comes to cash sitting. There's ways you can do it. You can buy into their kind of bond market fund that they have and use it as collateral for option assignment. But from my understanding, I believe you have to wait 30 days or so before you can use that. And it's just not the best way, right? I don't want this account sitting for 30 days, especially when I can produce income on it. So there's that. And then if you get assigned, it pulls it straight out of there and you're kind of back to square one. You'd have to freeze up for 30 days. Unless there's something else, a different way that you can do it, I would love to know if someone has the information on that, but that's my understanding of their system. So this $11 call is sold on American Airlines, made $46.34. And then on these $12 puts, generated $352 off of those three puts. It was pretty exciting. And that also brought my purchase price down to just some rough math here at $12. So it would be $10 and roughly 80 cents, give or take, right, for my entry price if I were to get assigned. So that was a pretty good entry price at the time. I believe American Airlines was at like $10.90 and some change. So I didn't mind being a buyer then. It'd be like buying out of cash on that day. But instead, we also got that option premium, and we can use that to kind of help fund things in the future. And then worst case scenario, you just sell calls against it and kind of dig your way out, I guess, if you will, if prices were to go down. Also sold an $11.50 call, made $26.34 off of that. And then those $11 puts generated almost $100. Pretty exciting. And that moved out of the money rather quickly. So let's jump into American Airlines. When we entered this trade, $10.98. So you're like, okay, makes sense why you did some $12 puts, especially if you're bullish. Why are we bullish? Because American Airlines have kind of sold off and we've bounced, right? Generating these fair value gaps, we've filled these. I don't have huge concerns. That one's not quite filled, $10.38. We might come back to this zone, but really what I'm looking at is this zone, $12.80. We're going to fill this gap at some point. And right around this timeline that we entered this trade, the Fed had lowered the interest rates, and the airline industry relies pretty heavy on debt and financing. And so with lower interest rates, kind of bullish on American Airlines. And so worst case scenario, we drop to this 1038 zone, I kind of felt, and my entry would have been maybe $10.80-ish right on my puts. Not terribly far off, could sell calls and easily dig myself out of that if it went against me. But being bullish, general market sentiment, we were going here to $12.80, so we sold some $12 puts, and it's fared well for us. $11.87 today, as it looks like we're about to close, and we got like 3 or 4 days left before these options expire. So not a bad choice. Charles Schwab portfolio. This is where I really like Charles Schwab. They take into account everything and they portray all of it into the performance aspect of the portfolio. So this account, I didn't start until July 6th, it appears to be specifically. And we've had some pretty good returns since then, right? We've generated $1,004.32, which is pretty good on my American Express points. I don't know what that breaks down to per point. Might have to do a video on that as well. Kind of be clickbaity, right? When you're like, how to 10x your rewards points and the interest you make on them. But we've returned 13.74% interest, outperforming the S&P 500 in the last couple of months. Now, the S&P 500's been on a pretty good kick. Hard to outperform this year. I think we're up quite a bit, maybe like 25%ish or so on the year. I don't hold me to that. I'd have to look more closely, but it's up quite a bit, right? But we're outperforming it since we've opened this portfolio, which is always the goal. If you can outperform the S&P 500, that's pretty exciting stuff. So this account, again, has produced $998 in investment gain, and then $6 in interest. And you can see here, there's that credit interest for the cash we're holding in this account, $1.71. Just not exciting compared to what Fidelity's given us, right? So moving back over to our total portfolio analysis, since induction, I really don't listen to April because that's just kind of loading up the accounts. We've been able to generate at least a 3% average in Fidelity, and then Schwab 4 or 5% average roughly over here. But when you combine them, that's really the goal, is to get the combined account total. We're generating 4.51% last month in September, which I'm pretty excited for. As we roll into October, trades I'm looking at really are American Airlines and Ford for selling some puts and calls. We'll see how this week ends. I don't want to commit to that by any means, but we'll see how the week ends, and next week we'll analyze things further. But thank you for joining me for September's portfolio analysis, or trade analysis, I guess, if you will. I hope that you continue to follow along. I'm kind of building this video series to look back at my trades and how I've progressed over the year and how I've worked my way to a financially free life. So like and subscribe if you want to continue to follow along on my journey. And thanks for joining me.